Fed Jerome Powell just confirmed a recession is coming. In quotes, Fed Powell says he is strongly committed to fighting inflation and notes a recession is a possibility. Now, when the Fed says a recession is a possibility, it's much the same way as what we heard in November, that inflation is going to go away, that we're going to see low inflation by the end of the year, and then they slightly start to change their tone. This is the first change of tone around a recession that we have heard from the Fed. The Fed has been saying over and over and over and over and over again that a recession is not likely. We do not see a recession is coming. Even during the summary of economic growth projections that we just got from the Fed last week, the Fed still expects 1.8% GDP growth. So how is a recession a possibility? We're going to talk about that here in this video. The markets are starting to expect a recession, as you guys can see from the bond yields that are dropping sharply today. This could mean a bottom is on the near-term horizon, or is it not? We're going to get into it here in this video. So hit the like button if you guys find value out of the video. Get your free stocks down below in the description. Essentially, it's free money, so take advantage of it while it does last with Webull, Moomoo, and Public. Nonetheless, let's talk about what Fed Jerome Powell had to say today. Yes, Fed Jerome Powell did testify in front of Congress for a couple hours today. He testifies in front of Congress tomorrow as well, so we might get some new information. And a lot of congressmen and women, they are asking about a recession. That seems to be a top priority in most of the questions the Fed was asked today. So that's why he kind of cracked with the whole, it's a possibility kind of thing. It's confirming a recession is coming. If not, we're already in one. That is essentially to say that Fed Jerome Powell, he gave us the warning that it's a possibility. He put it out there and essentially gave the markets a warning. That's really what that is. The Fed's words are powerful, and we should definitely take it with a small grain of salt. Like they're being confirming it for us right now. Let's not get that confused. Now, the key points. Fed Chairman Jerome Powell said Wednesday that the central bank is, quote, strongly committed to bringing down inflation and can do so with its monetary policy tools. And that's really a joke too. Let's just be honest in this video. The Fed cannot bring down the price of oil. They cannot bring down the price of food. So inflation is not going to go down. It seems like it's simple Econ 101 here. It's not only just the fuel costs that are adding to inflationary pressures. Not to say it's not a big deal that gas is expensive. Obviously, it's a huge deal. It's the difference between a recession and not seeing a recession. But really, what is hurting inflation and keeping inflation high is the businesses that are affected by the price of energy. Your Amazons, right? They're not going to burden that whole cost of fuel going up over 100% year over year. They are passing that cost on to people that are selling products through Amazon. And then what are those people that are selling products through Amazon going to do? Well, they are raising prices for people like you and me. And that's where you get this trickle down inflation that is really coming from the price of oil being so high. But Fed Jerome Powell goes on to say, he says that means higher interest rates until, quote, compelling evidence emerges that inflation is coming down. So we're really just going to get Paul Volcker here. We're really just going to see higher rates and inflation not coming down in the way the Fed expects until the Fed realizes they are making a policy mistake and that inflation will come down when the war ultimately does end in Russia and Ukraine, and when the expectations for oil demand and where oil is going to come from comes back into alignment. And that happens when the war in Russia and Ukraine does eventually end. Now, maybe on a positive note, you did have Jim Cramer that came out today and said maybe the war in Ukraine is going to end tomorrow. In quotes, want oil down? Question mark. Win the war in Ukraine. Plan for it coming tomorrow. He said that today at 11:41 a.m. That is a strong statement. So we'll see if he has a crystal ball or if he knows something that we do not. But that would be the most positive thing for the markets that we could see right now, is the war in Ukraine ending, and that would probably drop the price of a barrel of oil maybe 10 to 20% overnight, and that would be the biggest thing that would help inflation come down. So keep all that in mind. I just laid a lot on you guys. Go back and reread, or re-listen, I should say, to the video if you guys do need to. So we get that part. But the markets are taking Fed Jerome Powell's words very seriously. It's not just me taking them seriously. You can see this reflected in the bond market. So the US 10-year Treasury yield is now down to 3.16%. It dropped 14.5 basis points today. That's about half of one normal rate hike for the Fed. A normal rate hike being 0.25%. We dropped over half of that for the day. Right. So what's essentially happening is investors are looking at the 10-year Treasury bonds and saying, hey, I can get paid out 3.16% risk-free, and the Fed is saying that it's a possibility we get a recession. So essentially we are going into a recession, and when you go into recession, you see the price of oil come down. You always will. You see essentially deflation during a recession. So if that happens, then a 3% guaranteed yield is not bad at all. And this is essentially the bond market is snitching to us. It's saying, yes, we are going into recession. We are taking Fed Jerome Powell seriously. So that's why I'm relaying you guys this information so sternly. It's not a question of it's a possibility we're going into recession. We are going into recession and possibly already in a recession. We will know for sure though. July 28th, mark your calendars. We get the advanced estimates for Q2 GDP numbers. As you guys know, Q1 GDP came in initially at about 1.1% negative. It was revised a couple of times. Now it stands at negative 1.5%. So if we get another negative reading, you are in a technical recession. Now, how could this mark a bottom for the markets? Well, if we go into a slight recession, let's say the war in Ukraine does end, the price of oil does come down, and overall CPI does start to come down at the next couple of meetings. Maybe not this next reading because we're already through the month. Oil did come down a little bit in June, but nothing substantial, right? But let's say July, the price of oil comes down in a big way. Inflation's going to come down in a big way. The markets are really going to relax a little bit. Now, that's the bullish case. The bullish case is things are fine. Not too many defaults come out. Not too many hedge funds go under, given where the margin rates are, given what has happened with the Nasdaq down over 30% year to date, and the margin debt only dropping ever so slightly, only about less than $100 billion for the full year of 2022. Let's say we avoid that. Let's say we avoid bankruptcies, avoid margin calls, price of oil goes down, the Fed can acknowledge inflation is coming down, maybe they signal they don't have to go as aggressive. That's the bullish case. The bearish case is the war in Ukraine lasts for a couple more months. The price of oil stays high. We go into a recession July 28th. And then the markets realize inflation is way too high. We're in a recession. The Fed is going to continue raising rates as we are in a recession, and we have quantitative tightening at the same time. We've never had 8.6% inflation. At the same time, obviously, the price of energy being at record highs, the average gallon of gas for America costing $5. The same time, you have quantitative tightening, the Fed raising rates during a recession. You've never had the combination of all of those things happening at the same time. That's where you could get a very negative reaction. And also add on top of that, like I just said, the margin debt, January of 2022, sitting at $829 billion, only going down to $752 billion. That's not a big drop for a 30% drop in the Nasdaq. So if we were to theoretically fall another 5 to 10%, let's say the Nasdaq goes down 40%, you're going to start to see margin calls in a very substantial way. And given where things are at right now, you could see a lot of bankruptcies coming in a very short amount of time. So that's basically the good and the bad. What happened today, essentially the Fed confirming a recession. Now, another very important thing for this week, we don't have a lot of economic data overall. We have weekly jobless claims tomorrow. Like I said, we also have Fed Jerome Powell's testimony tomorrow at 9 a.m. That will be important again if we do get new statements and more headline news. That's going to affect the markets, obviously, negatively or positively. But at 3:30 p.m. tomorrow, you do have the Fed bank stress test results. And let's go with the worst case scenario, the one that I just outlined. The markets realizing recession is here. We're in a recession. The Fed is raising rates because inflation is not going down. It's just all bad. Bankruptcies start to happen, so on and so forth. Let's imagine that scenario comes true. But at the same time, let's say the banks perform very badly with this with the stress test. And essentially the stress test is saying, hey, the stock market falls 50%, unemployment rate at 15%, default rates at like 25%. It's like a worst case scenario economic situation coming to fruition, and it's testing the banks to say, can they still lend out money? Are they liquid? Are they going to go bankrupt, right? So you guys get the idea of that. But let's say the banks perform bad tomorrow, like really bad. Well, you're going to be looking at some more substantial downside pressure, and you're probably going to hit new lows in the markets. I don't expect that to happen, but if it does happen, you're going to hit new lows on the S&P 500. It could be a 3 to 6% or even a larger down day, because ultimately, if that worst case scenario plays out, it will probably just be a recession. If banks start to go bankrupt and the Fed has to essentially bail out banks, given where their balance sheet is, given where inflation is, that's a depression. So it's a very big deal for the markets, and that is coming tomorrow. So hopefully you guys found some value out of this video. I don't want to make this video a half an hour long. I could honestly just go on and on and on about the good and the bad scenarios here. It looks like we're in for a continued bullish rally as long as the Fed, tomorrow Fed Jerome Powell is saying the same things that he is today, which that's what I imagine. I don't think we're going to get any new crazy headlines coming tomorrow. And if the stress test is okay, then you're probably going to see that continued bullish move throughout the rest of this week, and you'll probably continue to see that 5 to 10% rally from the bottom that I projected once we hit the bottom just a couple of days ago. We're currently up about 3.5%. That would mean we have about 1.5 to about 7% left to go, give or take, here in this market bounce. But like I said, if things don't go good this week, you could still see a lot of downside pressure. So keep all of this in mind. Thank you guys for tuning in. Like I said, if you guys found value out of the video, hit the like button, subscribe to the channel. Also, get your free stocks down below in the description of this video as well. You guys enjoy the rest of your day. I will see you in the next one.